The U.S. has demanded all sorts of things, including changing some of their protectionist policies around industrial production. No word yet on that.
Yeah, which is why I think it's almost impossible to handicap exactly how much progress is made toward whatever the likely outcome is going to be. It seems like it's all about what the U.S. would accept, and we don't really know that. You hear from both sides.
Well, I guess it's almost impossible to handicap if we get an actual full-scale deal that deals with all the long list of problems we've talked about. But the tone of that meeting suggests that the president really wants to avoid the worst-case scenario, which is to continue to play hardball. So, Stephanie, I mean, this tone, as Mike says, not definitive about what type of deal we end up with, but does suggest to the markets we're not going to get something cataclysmic.
We're slowly checking off the boxes of the uncertainty, right? We don't really have all the details yet, and we still don't really even know what on the other side what the Fed is going to do. So trade and the Fed and the government shutdown. Those are the trifecta that brought us down.
How about the earnings slowdown?
No, but that brought us down in December for sure. And so we're slowly checking off the boxes, and the market really, I think we want to get more detail for sure, and we want a good deal for sure. But the uncertainty is what was really plaguing the markets and really was responsible for the multiple contraction that we've seen over the last
I want to know which companies
years.
You would buy if you had a more confident feeling about which way the trade talks were going to go.
About trade?
Yeah.
I would buy cyclicals, I would buy energy, I'd buy industrials, I'd buy technology.
Do you think all of those valuations are being held back by the uncertainty around this trade?
And I would just add a technology, and I would say that's one of the reasons why the semiconductor stocks are actually better. But I think all of that, yeah, I mean, I think they're starting to price it in, but I think, again, it's getting rid of the uncertainty is a really big deal.
Mike, if we end up getting a deal that is essentially back to how it was before, maybe with a little bit of finessing around the edges, but is not the full-scale, long-term U.S. wins type deal, how much more upside is there in the market? Is that already kind of priced in?
First of all, I think that's what investors have basically wished for all along, which is why did we even start this fight? Let's be candid about that. And then once the fight started, it said, well, if we're going to do this, let's get something more structural. Let's actually have some payback on what American businesses can do there. I think at this point, we've been living for a year with this, so I think the market would be fine with that, but we're up 15% in the S&P in 5 weeks. Yes, off an incredibly depressed level. So I'm not clear of whether that would be kind of a new propellant higher if we just got the as expected deal and an agreement to keep.
Right, but then you also have to add in the China stimulus, and we're starting to see stabilization right now, even without a trade deal. I mean, the PMI number wasn't great last night in China, but it didn't go down further than people thought. And we have 61 different kinds of stimulus programs in China going on since July.
And their currency has really rebounded.
That's exactly right.
Which is why I agree that trade is not a swing factor, right? It was like always about China hard landing.
Yes, but I think...
And if trade was going to make that more likely, that was a problem.
But I think if you do get trade, it's icing on the cake, right? And so you have all this stimulus. And oh, by the way, you have an easier Fed, you have an easy ECB, you have an easy BOJ. I mean, that is so opposite than this time last year. That is very good for risk assets. So you ask wealth how much higher we can go. I think international markets will outperform U.S. and they can go a lot higher.